Hey, this is Josh. Today is Monday, August 7th. Today was a trending trading range day and a weak bear channel day. You may ask, why do I call it a weak bear channel? And that's because the bulls were able to make money all day, even though prices spent most of the day and always in short market. The bulls were able to still generate a profit by buying low and selling high. And when prices are in a weak channel, they tend to act more as a trading range. And you can generally trade in both directions as long as you buy low, sell high, and scalp. And you can see prices mainly went sideways today. I came in somewhere around in here. This was a failed high 2 sell setup, but you're shorting into the bottom of it at the time, what was a small trading range. You can argue that there was a target down here which was likely to be tested, which was the bottom of this buy climax. If you saw that, I would say you probably can take this for a scalp, and it's high enough probability. However, you are shorting into lows at that time, and this bear channel was not clearly valid at that point, so I think it's better to take for a swing short, especially if you're a beginner. However, if you did know that this was a target down here, it can be considered an acceptable scalp. But better, like I said, better to take for a swing short. The bulls tried for a failed bear breakout here of this small trading range, but pretty strong. The bears got follow through of the breakout of the trading range here, quickly reversed up. This is not an acceptable scalp because at that point you're selling low on a mostly sideways day, and therefore this is where you need to be looking to buy. So I was looking for a second entry to buy, which formed here. Not great. It's a doji bear bar. It is a second entry to reverse the failed breakout, so I think better to take for a swing trade. But it is a second entry to reverse a failed bear breakout of a trading range, so arguably high enough probability for a scalp, but better to take for a swing trade. Bulls got good bull entry, good bull follow through, and broke. There was a tighter bear trend line in here. It's also arguably a wedge bottom. 1, 2, 3 pushes down, likely to lead to 2 legs up, which likely ended here or over here. This was a bit of a surprise bar. It was likely just a test of this low, of this close after this break of the tighter bear channel that I just showed. And it's also the first strong close above the EMA, so bears were likely to sell the close. However, it's in the middle of, it was also a breakup pullback short, but it's a bull bar for a signal bar, so not a great entry. You can argue taking it for a swing short if you're expecting a measured move down, but which I think we had already reached a measured move down based on the height of the opening range. Yeah, so we had already reached the measured move target, so I don't think this is a great setup. You can argue taking it for a swing trade, but it's questionable. Like I said, better to be looking to buy in this area than to sell. This was it's a double bottom higher low here from this low here, and if you look at a higher time frame chart, it looked like there was a bull trend line in here. Prices reversed up strongly from Friday's sell climax. This was a weak low 1 at the bottom of a trading range into the low of the day. Acceptable scalp to buy below for a scalp up, and you can see the developing buying pressure. The bears are getting weaker, the bulls are getting stronger. Bulls are buying below lows, and they're not having to scale in order to make scalpers profits. So that means that prices are likely to transition into a trading range and not continue in a strong bear trend. Therefore, it's better to look to buy low, sell high, and scalp. The bulls tried for a high 2 buy setup here, but at this point it's in the middle of this second developing trading range. Is trending trading range day at this point, small trading range, second trading range, bear breakout to another trading range, which I'll get to over here to explain why this is such a good setup. But so bulls tried for a reversal and to hold the bottom of the trading range here. It's a high 2 buy setup, okay, swing buy. But the entry that I'm marking with this bar here is actually this wedge, which is over here. That's not this entry that I was trying to point out. I'm just pointing this out as a high 2 buy setup. But the bears tried for a failed high 2 buy setup and an outside bear bar, could not break out to a new low, and instead found buyers around the low of this bar and formed a double bottom. This is a wedge bottom, both a micro wedge, 1, 2, 3 pushes down, and a larger wedge bottom, 1, 2, 3 pushes down. And it's kind of similar to this wedge top that we had overnight that formed. But either way, this was likely to lead to 2 legs up. It was a bit of a surprise to me whenever prices did not rally higher up here. But it's likely because the bulls who had scaled in exited in the middle of this trading range. And at the time, I thought prices were going to come up here and get at least a smaller second leg up to test the bear trend line, because at that point it was not clearly in effect. However, they did hold for the remainder of the day. But so not an unreasonable swing buy for a wedge bottom and a micro wedge bottom looking for 2 legs up, making this. And then there was also, that was a better swing buy because you're buying on a stop again in the middle of a trading range. But this was an acceptable scalp, buying below this week low 1. Bulls did not get a good entry bar, not great follow through bar, but a second leg up is likely from the wedge bottom failed bear breakout of the trading range. So acceptable scalp to buy below this bar for a scalp up. But pretty strong buying pressure and came up and tested the bear trend line. And you could have gotten this from copying the trend channel off of the lows and dragging it to up here. However, it did not fit very well, and it was not clear if it was maybe up here. So that's why I thought prices were probably going to come up higher, but they ultimately did not, and instead prices sold back down. This was a weak high 1 at the top of a trading range. Pretty strong buying pressure. So I think that you need to be willing to scale in if you take this entry, just in case prices do come up here, like I was saying. However, not a bad entry if you're willing to scale in. I do think it is an acceptable scalp, but like I said, better to scale in, be willing to scale in if you take this entry. So the bulls tried for it, pretty interesting because lots of wedges today. So they tried for a wedge and another wedge bull flag and a larger second leg up from here. You can see 1, 2, 3 pushes down. Bears tried for a failed high 2, which failed, and then the wedge failed and made a measured move down. So this was a wedge bull flag here. Not an unreasonable buy setup for looking for the second leg up for a swing buy. However, it did not work out. And instead, prices sold off and made a measured move down based on the height of the wedge. Formed a small sell climax, bear breakout to a new low of the day, where the bulls again bought the low, bears bought the low, and took profits. So sell climax, and therefore this was an acceptable scalp to buy below as a week low 1 at the low of the day on a trading range day, and after a sell climax, so acceptable scalp to buy below here. I do think it's better if you're willing to scale in, but still high enough probability for a scalp even if you're not. And I'll make this a little clearer to see. So this was a buy setup for a failed bear breakout and a sell climax and the measured move down from the based on the height of the wedge. It wasn't quite to the bear trend channel line, but we've had pretty decent buying pressure on the day, and it's mostly sideways. So like I said, better to trade the day as a trading range than a bear channel. But so the bulls and bears bought below this bar, bought this close. It turned into an outside doji bar, forming a variant of a second entry for the sell climax. You can also consider this a larger wedge bottom, 1, 2, 3 pushes down. However, the distance between these two lows compared to these two, I think it's better to just consider it a failed bear breakout of a trading range, but you can argue it's a wedge bottom. So this was a good swing buy here. And one other thing, so on a trending trading range day, prices after forming a few trading ranges, maybe 2, 3 trading ranges, there's often a failed breakout of the final trading range, which then prices lead back and test into the earlier trading ranges, which is happening now. So prices rallied back and tested to the upper end of this Sorry, I cut off. So I'm not sure where it cut me off, but on a trending trading range day, there's often a failed breakout of the final trading range, and prices reverse back into prior trading ranges where they test the previous support and resistance, which is happening now. And you can also consider this a final flag, the bear trading range, and failed breakout below, so large final flag reversal. So lots of reasons to want to take this buy setup if you had not already entered here. And if you had not entered either, then this was another week. You can consider it a variant of a week low too, where this is the first entry down, or you can consider it just a week low one. I consider it a week low one because the outside bar restarts the count. But so a week low one after a failed bear breakout and sell climax, so also acceptable scalp to buy below here. And so obviously the market became always in long here from the bull follow through of the sell climax, and broke above the EMA back into the prior trading range. This was a target up here, possibly higher. There's a possibility prices end up coming up and forming a trading range day often becomes a reversal bar on a higher time frame chart, like a daily chart, because prices sell off in the morning and then rally in the afternoon, or vice versa, creating a reversal bar. So this was another acceptable scalp. It is in the middle of the trading range, but the market's clearly always in long. It's a weak sell signal. It's a bull bar. You can argue it's a second entry with this is the first entry, or you can just consider the first entry after the always in flip. Either way, high enough probability for a scalp. It did not quite reach a scalper's profit, and I'll address that here in a minute because I had a question over the weekend about scalping. But so it did not reach a scalper's profit unless you had bought, I think, a pip lower than here, but still a good entry. And I took this trade and I exited below here whenever my scalper's profit was not reached. However, I did move my stop to break even once it came within a pip or two, but I did not like this sell setup, so I exited below because I did not want prices to come back to my original entry price. So this was an EMA gap bar. It's off the bear trend line, failed breakout above the bear flag trading range, but I thought a second leg up was likely from here, and therefore I was not willing to sell yet. This was a better swing short for a second entry. Two EMA gap bars, a 2-bar reversal, and second attempt to break out of the trading range. It's the first break of this bear trend line. Did not reach a swing profit, and I think that if you took this short, you probably would have exited above here, or if not, definitely above here. So prices are now rallying. It looks like there's a chance. It's pretty much in a small trading range right now, which is pretty common in the afternoon, but there's a chance that the bulls break out above and test up here to these overnight highs. Like I said, form a bull reversal day, or at least test in the middle of this trading range. So not a great day, pretty slow day. Like I said, most of the best entries were actually to the long side, even though the market spent most of the day as an always in short market. But on a weak channel day or a sideways day, it's okay to trade in both directions. The market never really made any very large swings, so like I said, most entries are scalps, which would be understandable on a trading range day. So I got a couple questions over the weekend. I have a lot of questions, but I'm not, from this point forward, I'm not gonna focus on, so don't take it personally if I don't answer your question, but it's just that if you ask a question that's already going to be answered in my book, I'm not going to spend the time answering it because I would just spend all day answering the same questions over and over, and the videos will become too long. So if I don't answer your question, it's because it will be answered in the book. So however, I'm not saying I won't answer questions. I'm just saying that if you have a generic price action question and I don't answer it, that's why. However, I will answer questions like as far as setups go. Like if you ask me why was this a swing short and this one was a scalp, or any kind of question on my analysis, I will answer those. And I'll also answer questions on like trading psychology and other stuff like that. I just don't want to spend too much time on price action questions because, like I said, they will be answered eventually once I'm done. I'd rather spend the time working on the book and finishing it than spending too much time on these videos for now. So don't take it personally if I don't answer the question. Just know that. So with that said, I did have a question from a while back that I thought was pretty interesting, and I don't think I ever addressed, and that was around indicators. So this trader writes in and says, can you explain what indicators like MACD or RSI do in order to give signals of weakness? Some time ago, I saw Brooks pointing out that he doesn't need indicators because he knows that the indicators are saying by looking at the chart. And I would agree. I don't even know what a MACD or an RSI, I don't even know what these indicators are. There are many indicators out there, but you have to understand that every indicator is a derivative of price. So what that means is that it's an indicator tells you to buy or to sell based off of what it has observed through price. So with that said, I don't need an indicator to tell me what to do, and I don't want an indicator to tell me what to do. I know there are a lot of traders out there that's what they want. They want to be told when to do what and how to manage a trade, but that doesn't exist. There's no one that can do that for you. You have to do it for yourself, and that's why I don't care about any indicators, and because I know I can see what the institutions are doing through the price chart, and all an indicator does is it forms an opinion based on the price action and then tells you you should buy or you should sell or whatever. But so I don't know what these indicators are, and I don't need any indicators, and neither do you if you learn price action. So I hope that clears that up. But I also had another question on the YouTube channel about scalping for 10 pips, and his question was in regards to micro pips. And a pip is the fourth decimal place. And if you look here, I don't even look at micro pips. Not every trading platform will allow you to do this, but this one, FX Trade, will. And I can change this to however I want. I can look at micro pips, I can look at pips, I can look at even higher if I wanted to, but I just pay attention to pips, so because I don't care about micro pips. I think that if you're worried about a micro pip, you're gonna become too focused on that and too distracted and not align yourself with the institution. So like I said, I only pay attention to full pips, and that's the fourth decimal place. And so his question was in regards to minimum scalps, and a 10 pip scalp is a minimum scalp that any retail trader like you or I should be taking, and that's often due to the spread. But I will say that, and I've mentioned this in one of my earlier videos a while back, I'm not sure when, but I observed the institutions in the afternoons, and here in the past few days, I looked back to see if I could find any good examples, but in the past few weeks or so, or the volatility has been high enough that the institutions are scalping for 10 pips. However, in the afternoons, usually after 2 o'clock or so, like in here, in this trading range, the institutions, they don't scalp for 10 pips. They're scalping for, I say, 5 to 7 pips. And you may ask, how do I know that? And if you understand price action and you watch what they're doing, it's pretty obvious that that's what they're doing. I think that it's questionable with the spread if they're scalping for 5 pips and they're paying 1 pip for a spread, but I don't think the institutions are paying a spread. So I think it's more likely that they're scalping for 7 or scaling in at 7 pips. But however, a retail trader should never attempt to do that, and instead, when prices are in a tight trading range or the market is not moving at least 10 pips, then you should just wait until the volatility returns. But I will say that I'm not saying that you shouldn't exit with less than a 10. Sorry, it cut off again. So I'm not saying that you should never exit with less than a 10 pip profit. Like if your premise is wrong, then of course it's obviously okay to exit with less than 10 pips. But in general, the minimum scalp is 10 pips. But like I said, the institutions are not always scalping for 10 pips, and they're often scalping for less and scaling in at less. But like I said, a retail trader should not attempt to do what they're doing. It is interesting to me because in the 6E, they are clearly scalping for 10 ticks, and I think that's a reasonable thing to do if you're willing to trade the 6E. But in the Euro USD or any other Forex market, in general, you should only be scalping for 10 pips and not try to scalp for less. And one other thing I wanted to say about indicators. So if you're looking for an indicator, or you feel like you need an indicator, you're probably looking for confirmation, and that's why you feel like you're not sure about the setup, or whatever reason you're not comfortable, and so therefore you're looking for an indicator to confirm what you're seeing. But you have to understand that as traders, we swim in a sea of uncertainty, and you're never going to have confirmation. You always have to remember the 60-40 rule, and you have to remember that you never know what's going to happen. That you can make an educated guess, but you never know. You always have to remember that there is a 40% chance on every trade that the price is going to do the exact opposite of what you believe, and that goes for every entry, every type of setup. So just keep that in mind, and you have to. I like to work out and exercise a lot, and in order to change your body, you have to endure some kind of physical hardship. You have to be able to push yourself through the pain in order to improve yourself, improve your body, and to change your body. And trading is no different. The only difference is that it's not physical pain; it's emotional pain. When you're a trader, you have to endure that mental pain of prices going against you, of not knowing, and that goes back to the ego, basically. So the fears of the ego, like fear of uncertainty, fear of failure, fear of success, and so you're never going to get confirmation. You basically just have to learn to identify setups and just enter and hope for the best, and practice optimistic acceptance, and just hope and know and understand that over time, as long as you're doing the right thing enough, that you will make money. I understand that it's not an easy thing to do, and like I said, you just have to learn to endure that pain. You have to learn to get comfortable being uncomfortable, and so I know it's not easy, but it's easier said than done. But it just takes a lot of time, takes a lot of practice. But so just keep that in mind. But all right, hope everybody has a good night.